Hey, Rita Boo Boo. It's time to get the pips from the pipnip basket. Good morning. Welcome to Forex.Today, the YouTube community. of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, good to see you. Make sure you drink your kale and your radishes and your celery. I want you to be healthy, good and strong. Yummy, yummy, yummy. Let me get some kale in my tummy. All right, so please complete the form. I posted a form just to find out our market sentiment. Is it risk on or risk off? We'll go through the markets, some fundamentals and some technicals during this live stream. So let me know if you want me to do gold, oil, or Bitcoin, or dollar pairs, or yen pairs. If you want me to do stock indices, let me know what you want to do, and I'm happy to cover that. We have everything at traders.com. I want you to get some good execution as well. You want to get yourself an ECN, get yourself an ECN at tradersway.com. Open up a demo account, speak to support, check out their back office. I think you're going to like it. Clean, organized, well done. But their business model being ECN it means they're one of the few brokers out there that don't trade against you. Do not trade against you. Yeah, so you need to have good service providers. Yep. And it's always been that way. Back when I was a consultant to startups and the venture capitalists, and later as a venture capitalist, it always really came down to the quality of service providers that you were able to, surround your company with, because then it became more sustainable. It just makes sense. You should have a good service provider. Not the cheapest. You want to look at value. I don't think Trader's Way is expensive, but you certainly don't want to click on an ad that says we're the absolute total cheapest, because they're lying to you anyway. So go with Trader's Way, or at least start your due diligence there. So I revamped the website a little bit. When you click on markets, it takes you directly into our squawk box.
Pound US dollar modestly firmer, Scotiabank.
Euro steady and upper 1.0s, Scotiabank.
Canadian dollar steadies after Trump comments on tariffs, Scotiabank.
ECB's schnabel. It's becoming increasingly unlikely that rates are holding back spending.
US dollar mixed amid renewed tariff focus, Scotiabank.
US dollar, Canadian dollarized breakout as tariff deadline approaches. Cool, right?
ECB's schnabel. Subdued growth, not proof of restrictive policy.
US dollar weakens slightly as traders mull renewed tariff concerns. Euro US dollar price. Forecast, uncertainty keeps investors sidelined. Krispy Kreme stock heads for record low as earnings set for further disappointment. Yeah, neat, right? Totally. Hang on, I'm trying to get the good stuff off the bottom. There's also pineapple and coconut. I can taste some strawberry in there. Some blueberries. All right, cool. So the next part is our news radar. And this tells us that really nothing on the calendar matters until we get to Thursday. And then there's a little bit on Friday, but It's a pretty quiet week. Tomorrow's NVIDIA. That's going to be a market mover. That's not an economic report, though. Well, not a government economic report. It's the economic report of NVIDIA. But anyway, so that's probably the big event, is the NVIDIA earnings call tomorrow. Having analyzed everything else, it's definitely a quiet week. You might want to take a look at the scalping opportunities that are out there. These are the patterns that have already formed. And most of these in the beginning here are non-trendy type stuff. Non-trendy stuff. And then when I see here a breakout potential here for USD Swiss franc, I don't want to own Swiss franc. So I see that, but it's still a pass. Pound dollar looks like we have a breakout. Cool. You were alerted to this a few hours ago. Breakout, pullback, and long and gone is the next move. So that's a falling wedge, which is weakness. So this is a threat to bears. But for me, it's an opportunity for bulls in the future. So you can get like one of these, or you can get sort of one of these, right? Cool. So put that on the radar. That's a maybe. So 70% probability that we get here, but do you want to buy the dip and then take it to the next level? That's the bigger question. Down channel for Euro Yen 4-hour chart. Okay, that's a pattern of weakness. Now it's a scalp because, this idea that break and pullback seem imminent. Okay, it's counting it already as a break, but notice how it's just a scalp because it only gets you to this next level. So it's really, if it goes higher, it's even better, huh? CAD Yen, also a bearish pattern with a breakout. So again, maybe today, later today, maybe tomorrow, you got some ups on the yen. Fundamentally, that doesn't make sense, but that is technically happening. So on and so forth. So you can just kind of filter through all these things. Great. We have the volatility radar for implied volatility, which is just absolutely fantastic. Oh my God, this is such a cool tool. And then we added the sentiment radar. So it's all there. Isn't that cool? So how do you feel about gold or euro dollar? Well, we're answering more like, how does the market feel about euro dollar? This is market sentiment. Articles from 4 websites, all focused on FX. They're not really writing much about euro dollar right now. Over the last 7 days, below average articles as far as the number of articles covering euro dollar. So 4 websites, 46 articles. Generally speaking, those articles have been favorable for euro dollar up. And we've been like this since the beginning of February. I guess middle of February. Cool, right? I know. You can change the layout if you prefer. Another way to handle this is you can create favorites, as you can see I've done. And then you can just scroll through them very quickly. Gold, positive. Oh, nice. And then you can zip into it. That's cool, right? Again, below average number of articles related to gold. Reuters, Forex Live, FX Empire, FX Street, Action Forex have all written articles, 78 of them over the last week. And then just ever so sort of positive, kind of flat outlook for gold. It's been positive for quite some time. Since pretty much the middle of January. So we peaked out here and then it's just been sideways. So nothing's changed. It's just slightly positive. 78 articles are slightly positive gold. They're not saying anything bad. They're saying, should go up. Isn't that cool? Yeah, it's very cool. Okay, just a heads up. After today's webinar here on YouTube, David Pegler is hosting his webinar at 11 a.m. Eastern. And then at 4 p.m., I'm doing the Week on the Street where I download and record. Download and read economic reports from central banks around the world. Usually Australia, New Zealand, and the UK, and the Eurozone, and Canada, and the United States. Those are the big ones. And we do that on a regular basis every week. So I'll see the 53 of you there today. Let's take a look at the basic market fundamentals. Bitcoin below 90. Holy smokes, huh? And look at the yield on the 10-year. Just beautiful. Everything else is just kind of stable right now. But remember, dollar was 108 and it's dropped pretty significantly. Nice. Now, I've gone through all of these, so I'm not going to do them again. Okay, but you can see there's definitely some risk-off mood going on in the options market. When you look at the scatter plot, Bitcoin's getting crushed. Okay, Nikkei down, silver down, gold down, but these all have positive scores. Okay, oil's down as expected, Russell's down as expected, S&P 500 is down as expected. Yeah. Pound Kiwi up, pound CAD up, pound Aussie up, pound dollar up. These are all expected. Pound Kiwi, for example, has a score, I think that's an 8. Pound CAD is also an 8, and it's up today. Yeah, as expected. But the yens are up today, and that's not expected. So very interesting. Mixed day. Yeah, well, that's what you see when you log in. So today we spent some time on our scorecards and price forecasting in an earlier session. I'm not going to redo it. Take a look at technicals. Wouldn't it be cool if you could click a button and it takes you to this CAD yen chart on your MT4, MT5? You're like, not necessarily to trade it, but what if you just clicked that and it opened you to that chart? Wouldn't that be killer? Yeah. Or what if you used MT4 or MT5 and this was on your chart? Wouldn't that be neat? Yeah. Just looking at things, yeah, that would be killer. What do you guys want to do today? Do you want to start with commodities? Let's put everything on except key levels. Let's look at commodities today. Okay, silver down. WTI down. Brent down. 30-minute charts. Down, down, down. That's gold. Even gold coming down. Okay, hourly charts. Down, down, down. 4-hour charts. Down, up and then down. Silver on the hourly, down. Daily chart, oil down. Silver, yeah, it's sort of like a double top type thing forming. So I would say that is not down yet, but it probably will be. That's what the pattern is suggesting. And then daily oil up. Well, we've actually had that plan for a while, down to as low as 68, I think it was. And then up to 80, then down to 40. Oh, did I say too much? Okay, Brent daily, downward pressure, but as we get to a apex, maybe a breakout, pullback, long and gone. So everything is down, and then daily is trying to find support on these commodities. Interesting, huh? Next leg of Brent daily is also up. If it's right, if it's going to go up, that's where it needs to. Because in your mind, they are fighting. Right? What's in your head? All right. Sorry, I just went cranberry on you. All right. So we measure A to B. Do we want anything lower than a 618786? No. So if it's going to go up, it needs to go up now. So remember, this is an emerging pattern. It hasn't happened yet. So if it was going to go up, it's going to go up. But what if it gets lower than this? What if B is equal to, or what if C is, BC is equal to AB? Well, then you're much more likely to do this in the future. So if you were a bull and you wanted that, you'd drop into maybe a 4-hour, do a trap and break. If you were a bull, huh? Okay. Now I'm a bull 5 weeks from now, and I'm currently a bear. I explained last week in great detail how and why, and it has to do with a lot of geopolitics. Yeah. So anyways, down would be okay now, but I still think up later, followed by a big drop. Big drop. Big drop. Yeah. Fortunes to be made and lost. Right on, Sky Killer. Let me click in one more for you guys. Probably there's too much white space, huh? Is that better? Let's take a look at NVIDIA. Let me turn all the stock off except NVIDIA. So we got our little screener going. And nothing. Nothing going on with NVIDIA. So let me put them all back on. Now you're like, wait, Wayne, something is happening. Okay. It's just not one of the top 20 most reliable patterns. So you might see something, and that's just tickety-boo for you. But what if you said, I only wanted to know the top 20 most reliable patterns for up, down, sideways, or reversal? Well, that's what I did, right? For Investor Bootcamp video members, are there any TRADARS features available? The only thing at Investor Bootcamp are training videos and chart templates. That's why it's $88 a year. I'm probably going to do a stock trading course soon, reasonably soon. Over at Investor Bootcamp. So, there'll be special events like that. So I'm looking here at 10-year T-note. This is good, isn't it? This is good because we have an opportunity. Let me open this up. This is the price of the 10-year T-note. So when the price is rising, yields are falling. Cool. So this is the yield on the 10-year T-note falling. And now we are on our yellow line, which is a buy for bulls. So does this pattern show strength or weakness? It shows strength. Okay. Is this an opportunity right here or a threat? It's an opportunity. Okay, and so this is good. Oops. Okay, this is good. One would expect, based on the pattern, that yields will fall again today. Nice. That's good. Money is cheaper. Do you guys like cheaper money? Do you like cheaper mortgages? Do you like cheaper car leases? Then you want this to go up. Cool. So that's good. 10-year T-note is ZN. Okay. Okay, there's threats to this uptrend. There's threats to this uptrend. Netflix, threats to the uptrend. So Netflix, Meta, and Amazon all have threats today. Tesla has acceleration of the decline in price. Should get to 300 very soon. AMD, same thing, an acceleration of the fall in price. And Adobe consolidating on a little pullback, and all of a sudden breakout, pullback. So yeah. This market is generally heavy. This market kind of wants to fall. Now, this Exxon play is actually bullish on the 4-hour, that it'll get trapped there, and eventually we're not making lower lows, we're making higher lows, but we're not making higher highs. So what'll happen is the bears will capitulate, will hit their stops, and then it might go up higher. Now, for those trading this, I think they're thinking the way that I'm thinking. That in 5 weeks, well, before I get there, everything else wants to fall, this wants to rise. That's when I'm like, okay, why this particular stock? Why does it want to rise? Is it because they have a unique product that's been released? Their management team is better than everybody else? Like, why does so much of the S&P 500 want to fall today, and yet this is bullish? Well, I think oil prices are going to go up starting sometime in the next 5 weeks. And 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks from now, prices will be higher. If that is true, I would assume, now, I've owned XOM, I think it is, isn't it? I've owned this stock. I don't own it now. I don't trade individual stocks anymore. But, so I can't say I'm an expert in this particular stock. I can't tell you who the CEO is. I can't tell you individual projects that they're working on that might make this company more valuable or less valuable. So I don't have those types of fundamentals. But the type of fundamentals I have are macro, which is the historic price action of oil. And I think I understand why that seasonality is there. And so if you were trading this on a macro level, like Chevron maybe is better, maybe BP is better, maybe, Saudi Aramco is better. I don't know. But the macro side of this is, hey, if oil prices might go up, that might be good for Exxon. I don't know. So you'd have to look at the correlation and figure all that out. Yeah, Keefe. Yeah, for sure. All of it does. Okay, so we have to decide, Kevin. People have started to buy treasuries for some reason. So is the lower yield good, or the fact that they're, when you look at the market here, many of these moves are down, right? Whether it's down in an up channel or down in a down channel, many of these are like not so hot opportunities, right? It shows the stock market cooling off. And meanwhile, it seems like money is going into the bond market. So is it a good thing or is it a bad thing? Well, we don't know and we have to decide. So you have the lower yield that would be good, but if it's because the bond market is coming down or crashing, then it would be bad. So what I tried to analyze in the annual outlook is what is the potential through all these crazy headlines? What is the real potential for a stock market drop or crash, whatever hyperbole you want, versus a normal seasonal fade? That's where I want you to know, like, look, the stock market's supposed to come down this time of year. So obvious. Great. And later on, it's supposed to go back up. Cool. That's normal. And then we have to say, well, with all these headlines, maybe this year there's a crash. Okay, good. Now, that's where you go and you look at these spreads. And are market participants preparing for a crash, or are they just doing what's normal? Okay. And I gave you some variables, like the 10-year, 3-month spread. To say, is it a crash or is it a pullback? Do you buy the dip or do you get out and run? Yeah, good to know, right? Yeah, totally. Let's go further out here. Wow, nothing on Bitcoin? Really? Really? How interesting is that? Let me go back. Nothing on Bitcoin. Well, we know Bitcoin is way down. But what about reliable, repeatable patterns? Yeah, well, I have reversal patterns turned on, consecutive candle patterns, trend patterns. Okay? And they're not really showing up, huh? All right, interesting. 20 minutes ago, you got, let me pull out a little arrow here. So that's the next likely leg. Are you guys into that? Next likely leg, next likely leg. Cool. So notice this is Ethereum 30 minutes. It's looking beyond this. Really what you want to get to at some point is something like that, because then it's trendy. Is that right? 2 standard deviations? What time frame? So like Ripple here is actually set up for a sell coming up soon. We're pretty much there. So if you're not going to use channels, what I like to do is price action. Okay, so that's called a roll reversal. So if I was a bear, I'd be in sell mode right now on Ripple on the 30-minute chart. Okay. On the 4H, huh? All right, let's go over there and we'll take a look. Boo, 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 boo. So I already have it all on my chart. from a month or two ago. How does that make you feel emotionally? That I've already had it all plotted out. We've talked about it already till I'm blue in the face. And we've already plotted out our buy zones and role reversals and plan A and plan B. Those are weekly candles, guys. Kind of cool, isn't it? Cool. Hey, Charlie Harker, are you still here? I just saw your question about S&P. If you're still here, let me know and we can do a deep dive. Okay, so anyways, there's the Bitcoin, and we're in the zone now. There's two zones. There's the lower one and the higher one. Okay, this is zone 1. Okay, and this is zone 2. Now, since I've drawn all of this, things have changed because it's been weeks. Okay. Oh, is that right, Sky Killer? Yeah. So it'd be interesting to see what happens when we get a little lower, huh? Yeah. Well, Charlie Harker's not around. All right. All right. Well, I just wanted to do that. Where's my TRADARS? Oh, I got this up twice. That's probably unnecessary, right? How many times do you have to have the live stream up? All right, well, I'll kill that one. All right, so we're here. Where did it go? Here we are. Yeah, well, I just wanted to restart, okay, with my standard operating procedure. Because he says, you know, what do I think about S&P 500? And I'm like, I don't think anything about it. I have analysis. How do I feel about it? I have no feelings about it. But, you know, for someone that needs to know that information, you know, we can jump into these pretty quickly. So I'm neutral and it's bearish. What do you think about that? Yeah. The score got dropped by 3 points overnight. And that's because the technical trend has changed. And so that's what I think about it. I'm neutral. Cool. But we knew this was coming. All right. How do we know such things? All right. So how do we know these things? Or why do we assume these things? We have an up and then a drop and then an up. So somewhere around the end of February and the end of March, the stock market falls. Oh. And then it tends to come back. Oh, great. When do we expect it to top out? Canada Day. The greatest, most important day of the year. Yeah. Cool. How many people knew this at least 1 year ago? How many people have known this for over a year? Yeah. Then the world gets to a point where there's people that know and people that don't know. You're either Illuminati, you're illuminated by knowledge, or you're in the dark. That's it. There's nothing in between. So I plan my whole year around stuff like this. Yeah. Okay. That's right. Sky Killer's learned a lot about Canada Day. I put Canada Day back on the map. You're welcome, Canada. Yeah. Okay. Yeah. Cool. So you either have the data or you don't. Oh, that's so funny. The Gulf of Jim. That is so funny. Yeah. Cool, right? Yeah. And how many people here have seen me do things like tell you this, like this is the day I take profit and go on vacation, and then actually show up on a beach and hey, everybody, I'm out of the market, I'm out of the office, I'm actually doing this, I plan my family vacations around such things. Yeah. Yeah, I'm going to be on holidays right around here. Why? Well, I don't want to miss that. And then I have other holidays planned around here. Why? Because I'll welcome the pullback. Isn't that cool? Yeah. So I actually do stuff like this. This is real. I've been doing this for decades. This is, right? Wait for the dip. How about stuff like, I used to say things like buy in May and go away. And by May, I mean end of April to early May. And I remember somebody corrected me once. They're like, no, Wayne, you got it wrong. They're like, sell in May and go away. I'm like, I didn't get it wrong. If everybody's selling, I'm buying. So I also know that people that trade by rules of thumb things like something as simple as buy in May and go away, or sorry, sell in May and go away, I know they're wrong. They think they're right because it's a cliche. Like everybody knows to sell in May and go away. Really? Well, that might have been true for your dad, but things have shifted this way over the years, son. And you are either illuminate, you're illuminated by knowledge, by facts, or you're just in the dark. So imagine everybody that sells in May and goes away. Oh, really? You're a seller here and you're a seller here and you're a seller there? Really? Huh. When's the better time to sell? When you're low? No. How about when you're high? Yeah. Sell. Buy. Out. Buy. Out. Oh my God. Do you find this illuminating? Okay. What do you think? And then you have someone like Charlie Harker that pops in to YouTube gurus, asks a question, and then leaves because it wasn't immediately addressed with buy or sell. I'm like, dude, you should never need to ask anybody a question like that. It reeks. Ugh. Really? You don't know what to do before you do it? Mahai says the seasonality is usually consistent. Well, yeah, it's just mathematically what usually happens, right? Well, Mike, that's why I work for you, right? So I look at TRADARS as a professional trading platform for retail investors. People that don't have $2,000 a month for Bloomberg. And I look at it as a small business tool, right? Like I really do. I've always looked at trading as a business. From the absolute beginning, because before that I was a venture capitalist and before that I was an entrepreneur. So I'm a businessman. So I've always looked at Forex as a business and I've always wanted to get better and I've always wanted to get more sustainable. Now, by better, it doesn't mean more money necessarily. I mean, I'd love to make more money, but what I really want to do is smooth out the wrinkles, in particular the drawdowns. So I want a great Sortino ratio, I want a good Sharpe ratio, but I don't need to make, more money than God. Right? I need to make more money than Noah, but not God. So anyways, so I look at, we have all this infrastructure, but that's only part of it, right? So you have good infrastructure, fundamentally, technically, market sentiment, all of that. So you got really good, right? Really good infrastructure. But a missing component for most startups, and I want you to think about your trading as a startup and you're trying to build a sustainable business. So you have to have good information, you have to have good execution, but you also have to have a good team. Right? So on your team, you probably met with Jessica this morning. You've met with me twice. Then you have your meeting with David Pegler. And then today I'm acting as at 4 o'clock, I'm acting as an economist, actually downloading economic reports from central banks around the world, reading them line by line and explaining what it means. So look at, like, oh my God, look at your team. And that's just on a boring Tuesday. And so I am very excited for what TRADARS offers you. And I got some aces up my sleeve because I know, as a former professional investor in high-tech startups and, patents really, is that you need to be able to offer more value than you charge. And if you do that, you have a sustainable business, right? And I got some aces up my sleeve that will make that truism 100% apparent. Meaning, like, no brainer, there's nothing in the world that would stop you from joining our ecosystem, using the tools and hiring me as your economist, for example. So today I will work as your economist, download the reports, go line by line. And I do pick up the subtleties because I do have a degree in macroeconomics. Right? And not from Cambridge Community College. Yeah. Yeah. I mean, Harvard's a big flex, dude. I'm telling you. It's a big flex. Oh, you have a macroeconomic degree? Okay, that's good. Yeah. So anyways, cool, right? If you were going to hire somebody, boom. Yeah. I charge $300 a month and you get all this other stuff for free. Whatever, dude. Look at it any way you want. So it's cool, man. This is really cool.
Pound sterling outperforms US dollar despite concerns over Trump's tariff agenda.
So you just
merits. It is
minimize this in the background.
Near future that we will reform the debt brake.
And go through your United States Housing Price Index, MOM, above forecast 0.2% in December, actual 0.4%. U.S. December Case-Shiller 20 City House Price Index plus 4.5% YY versus plus 4.4% expected.
United States S&P Case-Shiller Home Price Indices, year over year, in line with forecasts 4.5% in December.
Bank of America CEO, we don't expect the Fed to cut rates further. United States Red Book Index, year over year, declined to 6.2% in February 21 from previous 6.3%. Crypto bloodbath, $325 billion market cap vanishes amid selling pressure. ECB's Schnabel. Subdued growth should not be taken as evidence that policy is restrictive. Oil prices dip on the Trump roller coaster. So I just minimize that and I go about my day. Do you see that? So, actually, you heard it. One of the things that came out while we were talking was Case-Shiller. Oh, I've been updated. Isn't that cool? I didn't see the Case-Shiller report, but I did hear it. Hey, trader, did you hear the news? Okay, this one's stalled out. This one's kind of stalled out. I mean, why don't we take a look at this one? What do you guys think? Euro dollar up this week down the next 5 weeks? What do you think? Are you long-term long or long-term short? Long-term long. Cool. We have weekly resistance, both by dynamic resistance, okay, price resistance, and market resistance. What are the three different resistances? All right, resistance number 1. Okay, this is based on price in the past. We don't see it, but it's over there somewhere. That's why I drew it. Number 2. Okay, I guess maybe I should label this, right? Dynamic. Okay, and this is price. Dynamic means it changes. So it's using the moving averages. Okay? And then 3, there's market. Market resistance. And that's based on these annual pivot points. Cool. So I'm going to probably look at this as all different levels of resistance. Okay, you can't always be right. Jim might be right. This goes up from here. Yeah, well, I don't know if he's right. I don't know if I'm right. Okay, so I have to define what I'm doing. I am a macroeconomic trend trader. And going this far out, the trend is still down. In fact, we're just challenging now the 21. I don't even see this as under threat yet. Now, of course, I'm zoomed way out, but at least as a buyer now, so let's say Jim is a buyer of euro dollar on the higher time frame, on the lower time frames, he should be cognizant of these prices and respectful of these prices because it is risk. Even if he's right, the risk is bears will challenge the authority of the bulls. So, WWWD, what would Wayne do? Well, okay, I would, if I were me and I'm a bear, I would identify this low and this high. We call that a trap and break. So let's say we do not make a higher high this week. Sam, I am. And then next week, it gives us some bearishness. Oh, what? So you get a candle that looks like US dollar gears up for manufacturing data on Tuesday.
Bitcoin breaks lower and below a floor area between 90,000
So what do we do 2 weeks?
To 92,092s.
What do we do 2 weeks from now then? If that's the case. Up, 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 up. Down, down. Do you go for 30 pips, 300 pips, or 3,000? You're selling at 105, maybe 106, and you're targeting, I can't read that, 97. So you're targeting, you should get 1,000 pips. How about that? Oh. Okay. Yeah, and it could be like down 333, up 150, down 333, up 150, down 333, three-wave correction, and then down, and we end the year there, or we start the summer there. I mean, there's all different variations, but you have to know where you intend to go if you want to go anywhere interesting. So I did this 2.5 weeks ago, maybe 3 weeks ago. And what was the plan 3 weeks ago? Up! And then down. So the down was 6 weeks in advance. The up was 3 weeks in advance. And it's all part of the plan. Dude. Brothers and sisters, pump up the volume. Jigga, 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 Slim Shady. Right? That's too cool for school, right? Yeah, it opened out of position. Yeah, that's plausible. But remember, the further back you go, the less technical it becomes and the more fundamental it comes. So this could be like Jim might be saying, well, based on his outlook for global trade or fiscal policy, like, for example, trade deals are going to get done. Peace is going to be made. Oil prices are going to come down. Taxes are going to come down. Consumer confidence will go up. Household wealth effect will take, and this is what Jim's doing. And I'm like this. So do I disagree with Jim? No. Those things may play out. So I have to understand both sides of the equation. I'm arguing at this point, I'm not technically ready to do that. I understand it fundamentally, but can I buy it here? Can I buy it there? No. That's all. But yeah, if we find ourselves like this later on, okay, yeah. Okay, what's the most important skill in nature and in trading? Your ability to adapt and respond to changing environmental conditions. It's not the fittest. Darwin rewrote his book 30 years later, The Origin of the Species. You were not taught this in school because your teacher doesn't know. Darwin, after spending his entire life continuing his research, he realized it's not the survival of the fittest. As a trader, it doesn't matter how much money you have, whether you have $1 billion or $1 trillion. It's not going to bail you out. You can be right for a while and then suddenly very, very wrong. And you can be stubborn and you can keep buying a market as it collapses. Psh, nasty. So your ability to adapt is the secret to longevity. So I'm like, I understand Jim's point of view. I don't disagree with it at all. Am I ready to do it now? No, not now. But I'm willing to be wrong under my current analysis so that I can be right later. Am I flipping? Am I trading both ways like a broken gate? Is it flip-flop, as they say in politics? No. But my goal is to survive. Okay? My goal isn't to be right. My goal is to survive and therefore To be right, I have to put pride on the line.
Close a tariff deal with the U.S. by next Tuesday.
Bitcoin reels below $90,000. Global market jitters combined with Bybit hack.
Right? So if I have pride on the line, I will keep making bad trades to show you how right I am. No, there's no pride in trading. There's no trophy at the end of this for you being better than everybody else. You need that? I don't know. Join a softball league. Okay? You want people to cheer for you? Get a puppy. In this case, if you're wrong quantitatively, adapt. Yeah. Okay, so that's where we are. Am I ready to flip? No. Oh, you guys are trading gold? Gold! Small time frames, buying dips? Yeah. Well, look at gold. I've had this now for the entire year. How am I doing so far? Oh, trading gold is so complicated, right? Look at that, I have the whole year planned out. Okay, well, let's try to do this in smaller time frames. You know where you're going, right? Okay. All right. All right, let's do this. Okay. Okay, here's the old high. So are we in January yet? Oh, so we got to go further back. Well, let's do it this way. All right, so you make a new high and we're here. You drag this across and somewhere down there is your new buy zone. You do it while you're up here. Now, could you buy the 21 EMA? Oh, yeah. In fact, you buy anywhere between the 21.55 EMA. But I can't see left of this. So I'm just saying, if this is your current high, you want to buy a dip somewhere between the 21.55. Cool. Comes up, it comes down, and there's another move, right? Well, here becomes a potential buy and here becomes a potential buy. Okay, right? Kick off the 21, collapse. Maybe that takes you out. Maybe it doesn't. Great. Up, higher high. Mark this. Higher low. You buy what used to be resistance, now support. Okay. So it makes a higher high again. So it goes up, pulls back, and you buy it at the roll reversal. Sweet. Meanwhile, when this makes a high, you drag that across. Cool. So it makes a new higher high, drag that across, comes back down, does a roll reversal, goes back up. So now here, right? Here or here, your call. Okay. Makes a higher high, so you drag that across, and oh my God, comes right back down to this. That's your buy zone. Okay. Then it kind of depends on where you drew it, fails to make a higher high. Is that a problem? Yeah. But you know, it just used this price again. So what do? It's no longer trending. Okay, we're range bound. Can you still buy between the 21.55? Yeah. But notice that at some point, the 55's in control, not the 21. Okay, 55, 55, 55, 55. What does this tell you? There's a greater and greater technical chance that this rolls over. Okay, that's technically. Fundamentally, no, not right now. Okay, you need to be able to look at the angle and separation between the 21.55. Yeah, obviously there's pivots going on here, right? Yeah. On all time frames. Cool. So you could scalp this way if you wanted to, or you could scalp this way. What about being in the middle? It's not a good idea. So you have to say, well, where's support? Well, there's a place you could scalp long. And then we got something going on here, right? There's a place you could scalp long. Do you scalp long here? No. Unless it breaks out. Just like I showed you over and over and over again. Okay, you're scalping gold. What if it breaks out higher? Then you let it pull back and then you buy that. Cool. So fundamentally, everything is right as rain, but we are stalled out on a price. That does mean the trend is falling. Now we have $2,947.60 as our number. What an amazing coincidence. Does anybody think this is a coincidence? That we have it down to the penny? And we've been stalled there for a month and a half. That's an amazing coincidence, isn't it? Oh, you don't have pivot points? Oh, I would say I'm sorry for you, but I wouldn't be. I wouldn't be truthful. Huh? Trading is about wealth transfer. Whoever makes the better trade collects the wealth from the person that made the less good trade, or maybe even a bad trade, or maybe it was an uninformed trade, or maybe they were guessing, or maybe they were chasing prices, or maybe they listened to a guru on YouTube or saw something on TV and they're like, I guess I got to buy gold on the annual R1. Really? That's what you want to do? Oh, Wayne, it's not my fault. I didn't know it was the annual R1. Well, that sucks for you, doesn't it? Too bad, so sad, nobody cares. It's how the world works. Was that too brutal? People don't like honesty, actually. Mike says honesty is policy. Yeah, but nobody really likes it. Hey, you want to buy it at the annual R1? I didn't know it was the annual R1. So anyways, huh? Mike says nobody likes to hear they're wrong. Mike, when you're interviewing someone, you should tell them they're wrong about something. See how they respond. Do they fight back? Do they get pissy? Do they keep their mouth shut? Do they get upset? Do they just agree with you? Oh, yeah, you're totally right, Mike. I don't know what I was thinking. You're like, dude, you just folded just like that? Yeah. Yeah. I remember I was interviewing someone for like a director of marketing, and they walk into the room and nothing is said for a good minute. And then I lean forward and I'm like, so what's your fucking deal? Dude, you learn about people very quickly. Because that was the one question they had not pre-memorized, polished up all their responses. Okay? Yeah. Right? And then the second one was, after we had a good laugh, are you wearing good shoes? And once again, they're just dumbfounded. They're like, this is the strangest job interview I've ever had. Uh-huh. Nobody interviews like Dwayne. So anyways, they're like, yeah, I got good shoes, I guess. I'm like, cool, let's go for a walk. You okay with that? Yeah. Sweet. I'll buy you a tea or a coffee. Let's go. I'll lock up my office, leave all your crap here. I don't need your resume. You don't need your briefcase. You don't need any of that. Don't leave. You can leave your purse here. I'll lock my office. You can bring your purse, whatever makes you feel comfortable. Yeah. And we'd go for a walk. Yeah. Those were really good days. I have very fond memories of those days. I think I hired like 400 people. I met every single one of them and got to know their life story, even the ones I didn't hire. So I must have met 1,000 people. Yeah. So anywho, this is Illuminati stuff, huh? Oh, the stock market's open. Yeah, you got to see, there's a great YouTube video of someone being interviewed. And I think it was the HR person that put up the video. So she's interviewing this potential candidate. Turns out the candidate, so the camera's on, they're doing a Zoom call. But the candidate has their phone open and it's running AI, listening to the HR person ask questions, and then typing out the answer for the candidate to read. And they catch them. Yeah, let me think about it. You're fired. Yeah. Oh, snap. Right? TT says risk on or risk off. I'll answer that question in the most intelligent way possible. Okay, and that's simply going to fundamentals. You ready, TT, or are you already gone? Risk analysis, gauges. Here's the answer to your question based on the analysis of 8 constituencies over 3 time frames. Okay, if you don't know that, you don't know jack. There you go. So have a wonderful trading day. The markets are live. Peace on earth. May the pips be with you. May our profits be above average. But wait. Before you go, youtube.com/@TRADARS. Wait for it. Okay. Here's the squawk running for free on YouTube. You guys should hang out here, just have it running in the background or chitty chat with other people. Okay? But please use it. Please subscribe. I need to get to 500. Please click the thumbs up button. Tell YouTube that this is good stuff. These things usually cost between $100 a month and $400 a month. This is free on YouTube. So please use it. Please help me promote it. Please use it. Please use it. It cost me, well, the last bill I paid was $500, and a month before that was $500, but that's just for the data. So this cost me an easy $1,000 a month, and it's free for you. There you go. It cost me $1,000 out of my pocket every month. There you go. You can have it for free. Please use it. Peace on earth. May the pips be with you. May our profits be above average. Thank you to you. Thank you to Forex.Today. Thank you to Traders Way. Cheers. That just happened.